Welcome, everybody, to the VALR Podcast. It's a pleasure to be with you again. And it's a great pleasure to also welcome and host Adam Levi to the podcast. Adam is the co-founder of Backed, and we'll talk about who Backed is. He is also the co-founder and CTO previously of DAOstack. And what I thought was very interesting is that he has a PhD in theoretical and mathematical physics. You can get a little bit for the craziness going on in his brain behind his head with all those mathematical formulas there, but I was informed that was also some of his kids' handwriting. But Adam, it's really lovely to be able to host you. Thank you so much for joining us.
Thank you. Thank you for having me. Pleasure.
Maybe to start off with, Adam, if you could just talk to us a little bit about yourself, and particularly kind of how and what inspired you, I think is in 2021, to make the leap from DAOstack into Backed, which is a tokenized equity platform. Mm-hmm. So a little bit about your background, and then actually what is Backed?
So, my background, as you said, is very kind of academic, scientific, techy. I also have like a bachelor in engineering. And I've been coding since I was 8, so I'm very much in the tech side of things. Basically discovered Bitcoin. There was no crypto at the time. Discovered Bitcoin around 2013. I was still doing my PhD, and I just read the Satoshi white paper. And luckily for me, I had enough, let's say, I knew enough things in order to understand it, which I think most people at the time did not. So I like game theory, cryptography, some economics, and I was able to kind of self-judge that, okay, this works. And I think that's kind of what allowed me to say, okay, this is important. And just became, when you get into crypto, you have like 2-3 years that you cannot speak about anything else. So that was my 2-3 years around 2014, 2015, that I spoke only about Bitcoin. And after my PhD, instead of continuing into postdoc, I had a few offers in the States. I decided to go full time into crypto. And I went to DAOstack, and there was the CTO there for 4 years. It was late 2016. The only thing I wanted to do is to build something in crypto, and it was becoming so because of Ethereum, the amount of things you could have built suddenly grew significantly, right? Because of smart contracts over just Bitcoin that was basically just payments. So I just started looking into smart contracts and started coding smart contracts. And I knew a guy that was then became the CEO of DAOstack. He was fascinated by DAOs. I basically, as the CTO, basically built, I think, the first year, and the back end, the front end, the smart contracts, almost everything in the platform, which was amazing. Awesome. The tech was very early at the time. Everything kept getting breaking every 2 days. In the environment, in the dev environment. And after 4 years in DAOstack, I wanted to do another venture in crypto. And I thought that a lot of things in crypto didn't have product market fit. Like a lot of things were either, like hypes that no one cared about in a way, or too much tech that no one is using. And I looked at the crypto ecosystem, and I just said, you had like the first product market fit of crypto, which was Bitcoin as digital gold, and the second was stablecoins. And stablecoins kind of changed the game entirely for crypto. And I tried to look at it and say, okay, what is kind of the next asset class to be tokenized after dollars? I think people at the time didn't see stablecoins as real assets. Like it was kind of looked at as different things. But we were looking at it as like the same thing. Like stablecoins are the first real asset. And then there will be other asset classes that will come. And we thought that equities are kind of the obvious next asset class to go on chain.
Wonderful. Wonderful. So to make it very clear for our listeners, VALR recently launched and listed xStocks, which are tokenized equities.
Indeed.
We were the first platform to bring this really to the African population, starting in South Africa, which is very exciting. Backed is the company, and Adam, one of the brains behind that actually Backed is the company behind xStocks, and we're going to get into that, what exactly Backed is and xStocks is etc.
Yeah.
But really fascinating to hear that. So you basically thought that stablecoins are the first iteration of real world assets. The next big one you said you thought would be equities.
Yes.
And I imagine that you guys are looking at other real world assets to also tokenize in the future.
Indeed, but I think public equities is so big that it's a huge market on its own, right? It's even bigger than stablecoins, right? The dollar economy is 30-something trillion, and public equities alone is like 120 trillion. So it's a huge market.
Yeah.
Okay, it's a huge market.
And right now, xStocks, and maybe let's get into xStocks. Right now, it's just US listed equities. Is that correct?
Yeah, the idea in the end for we as a tokenizers creating of xStocks, we can do any publicly traded equity around the world. And, we're starting with what we
that hasn't happened yet, though, right?
We did as part of some of the, let's call it, tests before, or we did some European stuff, but at the moment, yes, it's mostly US equities, indeed.
Okay, wonderful. So let's talk. So what's the relationship between Backed and xStocks?
So Backed is the issuer of xStocks. So you can think of it like the relation between Circle and USDC.
Wonderful. So you guys are the issuance. So let's take this from the perspective of someone that's just come onto VALR. They see that they can buy, NVIDIA xStock on the platform as an example. Let's actually unpack that. What's actually going on in the background? We know very clearly, and we're very clear to tell our customers, the tokenized asset does not give the traditional rights to ownership of the underlying asset, etc. But it should trade in tandem with the underlying. And of course, these are assets that are backed one-to-one with the actual underlying equity in custody in the traditional financial system. But talk to us a little bit about how all of that actually works.
So, let's keep the stablecoin analogy because it's very helpful. Okay.
Sure.
So when you own USDC or USDT, you do not own a dollar. That's a very important thing to understand. A dollar is something that is issued by the US government, right? And by the Fed, basically. And when you own a USDC, you own what's like a commitment or an IOU by Circle, let's say. So a USDC is a redemption right. It's a commitment for Circle to redeem this token for $1. That's what it is. Okay, so it's kind of a wrapper. It's actually, there's another analogy that is interesting, like wrap Bitcoin. Wrap Bitcoin is not Bitcoin, right? What is a wrap Bitcoin? It's a commitment by BitGo to redeem this token for 1 Bitcoin. Okay.
How does Backed make money? I know, and using the stablecoin example, of course, we know USDT and USDC, Circle and Tether, or Tether and Circle, respectively. They obviously hold reserves that they can earn interest on, etc., and that's how they make their money. But how does that work with equities? So
I think with equities, like a big part of the business model that, by the way, also applies to stablecoins will be issuance and redemption fees. So at the moment, if you want to redeem, let's say with Tether, I think it costs like about 10 basis points or something like that. And Circle also recently introduced issuance and redemption fees. I think with equities it's going to be easier because anyway, the underlying fluctuates and there's like a constant arbitrage. So there's a reason to kind of issue and redeem constantly. So I think fees long term will be a good solution, but the real answer is that no one knows it, right? This is a new market. And there are different models, like people also kind of consider maybe lending some of the underlying, similar to stablecoin where people lend, what Circle and Tether, you're saying they're buying treasuries, right? But what do you do when you buy treasuries? You're basically lending the money to the US government, right? There is also in TradFi, a less known market, but a very big and a market mostly played by prime brokers, where they lend some of the equities they have to people that want to do shorts, right? Mostly kind of hedge funds. So there is another market. At the moment, we're not doing that. And also this requires a lot of regulatory frameworks. But the real answer is that long term, we don't know what will be the business model that will dominate this market. But there are a few options already.
Yeah, when I've had some questions about this, I've said, this is an interim kind of solution, I think, and I'd love to get your thoughts here, which is, we've got these stocks that are being held by a traditional custodian, and then there's obviously the issuance of the xStock on the blockchain, and then there's a reconciliation between the two. That it has to be one-to-one backed. But I really firmly believe that this reconciliation will go in the future, because I think there will be people that will be issuing directly onto the blockchain without the need to actually hold it in TradFi. So I wanted to see kind of your thoughts on that and how you look at the future panning out in this respect.
So it's a very interesting kind of observation, and I think there is a chance that's going to happen, but I'm not sure this is kind of the obvious thing that's going to happen. If you look at TradFi or basically every other aspect of life, sometimes things get stuck. Like there's some kind of wrappers, or there's a lot of things that you in TradFi, for example, that don't make sense, and they're there for historic reasons, right? Or so I think this might stick as well, because let's think again about stable coins. So you could say, okay, the Fed could just issue $1 on chain. Why do we need Circle and Tether? It's kind of redundant, right? No one needs that, right? They can just issue $1 on chain, and we can just all trade with those dollars or hold these dollars directly. Why do we need this intermediate? But apparently, in life, sometimes this kind of air gaps or intermediaries, they're helpful. I think for the regulators to allow tokens like tokenized equities to be permissionless, for example, it's a big leap. On if you consider the token itself as the share, where the wrapper, I think it's easier for it to be permissionless because it doesn't pass some of the rights like voting or so sometimes these kind of wrappers that you think are inefficient, they have their merits. So I'm not saying you're wrong. I'm not saying that it's not going to happen. I'm saying that it's not obvious as people might tend to think.
Yeah, I think it's early, and as you said, I think there are merits and demerits on both. So we can one can debate that. I think ultimately, what I would love to see, and what we always try to see, is ultimately we want people that will hold the token to have the particular rights that would have been kind of vested in the underlying, right? So I think, but I think right now we're not there. We're taking the steps towards getting there, and as you said, it's a very early ecosystem. I had some reflections recently just about how finance has evolved over the last several thousand years, and here we are, 15, 16 years into this asset class. And it's just mind blowing the types of things that I think that will be built upon this in the future. So as you said, we don't know what will happen, but it's we're trying to push the frontiers of innovation, which
I think we live very well. We live in a very kind of rapid innovation in many aspects, and also in finance. You said thousands of years, but fiat is like the fiat that we know of is like 50 something years, right? That's crazy.
Yeah, the US dollar 1971.
We live in
55 years old. It's very young.
It's like we live in an experiment, right? It's that's how 100%. That's how history we look at it, right? It's
and to be clear, the experiment is the US dollar, not crypto.
Yeah. So the dollar, it's still early, but not just the dollar, right? All currencies at the moment are fiat currencies, and that's something that is, in my intuition, is non-stable. Right. So, and
I think it's important for the listeners to hear that this has been done before, where there's that fiat currency, but it's never ended very well. It's never ended well. Inflation and other things of that nature. So it's really, what my reading of history is that we will have a repeat of that at some point in the future. We just don't know exactly when and where, but obviously that the US dollar was decoupled from gold. old 54 years ago, and now is not backed by anything except for our collective faith. And faith changes, obviously, over time. Let's get back to xStocks and ask you a little bit about some metrics. When did you guys launch xStocks exactly? Was it in around May this year?
Well, I was less than 2 months ago, so it's been so much. So it's so many things that happened, But I think the date was June 30th. I think so.
Okay. I know there was some commentary before. I think it's a little early. I think probably around May, if I'm not mistaken.
No, I think it was announced in May, but I think launched just June 1st.
The launch, okay.
Yeah.
Okay, got
announced in May.
So that's that's more recently than I had thought.
Yeah.
So can you share a little bit of some metrics? I don't know how you guys keep track of this at Backed. Is it the number of wallets? Is it trading volume? Is it issuance? Whatever it is, it would be lovely just to share some of the latest figures with the listeners.
We keep track like everyone in crypto, so we have a Dune Analytics dashboard. So
let's get that up.
I can give you some numbers. I think so. I can tell you my favorite number, the number that I track the most is unique holders. That's for me like very important. It's very.
And how do you look at that? The number of wallets?
Yes, number of wallets. And you can also kind of in a way do a histogram of kind of how wallets that hold up to $10, up to $100, up to it's kind of interesting to kind of also have kind of more granular data. But we have over 26,000 wallets, which is remarkable. I think in less than 2 months.
How many? 26,000.
26,000. Yes.
Okay.
And
amazing.
Yeah, so we have over $55 million in AUM, and I think SEX volume is over 3 billion or something crazy like that. So just the velocity of these assets is crazy. There's amazing. Over 600 million on-chain transactions. So yeah, quite a bit.
When you say on-chain transactions, what are you talking about exactly? Are you just talking about transfers, or are you seeing it being used in DeFi?
So also DeFi. I'm talking about transfers because we used to kind of distinguish between transfers and DEX, but now because there's a lot of RFQ, then you don't really know, right? So a lot of these transfers are actually RFQs. So the RFQ.
Why don't you explain what RFQ is for our listeners? What does that mean?
Yeah. So basically, RFQ is request for quote. We used to have on-chain liquidity only by DEXs. Uniswap pools, either UniV1, UniV2, or CLAMMs, like concentrated liquidity pools. And I think in the last year or so, I think the push for that was mostly from CowSwap. Basically, you have kind of solvers or market makers that hold liquidity, and they give quotes. And that all happens in servers and like APIs behind the scenes. And they give you a signed transaction that you can then relay and have the swap, the atomic swap. It's much more efficient capital-wise than having pools that constantly has to be arbitraged. I think the Solana ecosystem is much more advanced at the moment on this than the EVM ecosystem, but the EVM ecosystem is really catching up quickly. So on Solana, you have PIF Express and you have Jupe and you have a few other kind of RFQs. On EVM, now you have CowSwap, as I said, there is 1inch Fusion, there is Uniswap X. So it's coming together also.
Amazing. Well done. You made a little prediction, I think, at some point about tokenized equities at some point outstripping the issuance value of stablecoins. Did you say that?
I did. I'm not sure when, but I remember I said it. I'm not sure on which kind of occasion. But I did.
When would you like to provide? Like, when do you think that could potentially happen? Like, what is your timeline when you look at this thing going forward? When do you see, if that were to happen, when would such a thing happen?
I think, like when I look at tokenized equities, I like to look back at the charts of stablecoins. And stablecoins, unlike what people think, they grew very slowly. So stablecoins, it's kind of a very good example of a geometric series, right? So at the beginning, it looks very slow, right? But at some point, the exponent goes crazy, right? So it took a while for Tether to go to $10 million, I remember. And this was 2014, I think. There was no Ethereum. Tether was on Omni at the time.
It was exactly on the Bitcoin network.
Yes, there was a second layer on top of Bitcoin called Mastercoin that then rebranded into Omni, and Tether was. By the way, Omni was also kind of. I know the guy is like the Israeli guy that was the CEO of Mastercoin, and basically Tether started there. It took them a long while to go to 10 million. Then it took them about the same time to go to 100, and then about the same time to go to 1 billion. And you see the series, right? But it's at the beginning it looks very slow. And I think the same will happen. And by the way, I think if you look at Pax Gold, for example, the Pax Gold product, people kept telling me, okay, it doesn't grow, but it grows. And now I think it's almost at 1 billion. And the next leap to 10 billion will be kind of very quick in a way, right? It will take the same time period. So I think that the real assets and financial assets in general, it takes time to bootstrap them. And I think that's what we're seeing. But once we cross, I think the 1 billion, 10 billion, you're going to see the exponent really kicking in. And so I do think that it's going to, in a way, outrun or compete with the stablecoins kind of AUM. It will take time.
Gotcha. But if you had to put a stake in the ground, when do you think that would happen? If you had to say.
I like to speak in cycles.
You can do all the mathematics. What's that?
In crypto, I like to speak in cycles. So it's like 2 cycles, like 8 years or so.
Okay, so about 8 years, let's say.
Yeah.
Okay. All right. We'll have you back on, Adam, in 8 years, and we'll take a look at where things are.
Sure.
Then.
Well, 2 cycles, Bitcoin will be in 1 million, right? So it's fine.
We're not joking, by the way. I think it's a very good chance, but that's where that's going to be. So let's talk a little about the community, actually, because for adoption and for xStocks to get there, it requires a lot of adoption, a lot of exchanges to list it, and just really an ecosystem to develop.
Yeah.
So there's an xStocks alliance. I would love to hear just kind of how you guys think about that. Who's involved? How are you growing it? Are there big announcements that you wish to share right now? So, just about that intentionality about growing the ecosystem.
So I think, as you said it, in the end, it's a game of network effect, right? So you need the big exchanges, you need the market makers, you need the DeFi kind of, you need the wallets. Everyone needs to kind of support it so that in the end, the UX for the user will be good, right? So people think that, we became so much spoiled in crypto that you think that, okay, I'm going on my wallet, I do swap, and it just works, and I can get any token, and it's, the amount of work that goes into it behind the scene is crazy, right? You need the aggregators to support, you need the wallets to support, there's a lot of work for all of this to work. So this work is on us, right? To make sure that that basically everything works and everything is connected, and that you can then take your tokens and let's say deposit them on a lending market and borrow against them and leverage or whatever, and that that you have perps or you have other kind of instruments. So I think this is kind of the way we see it. Right, that there is a lot of work to be done with respect to the network effect, which is part of the alliance. Basically, all of our partners that contribute to this network effect, so that then users can just use their tokens as a standard, like they do with USDC or USDT or others.
Absolutely. Are we going to be getting any announcements of major new players that are joining that alliance?
We have some in the pipeline. I don't think I have something signed that I can announce, but we have some in the pipeline. Yes.
Okay. Wonderful. Let's also talk about kind of some of your technical decisions. Obviously, you guys are issued, I believe, on several different blockchains.
We started with Solana. Now we're doing kind of the EVM launch, indeed.
Exactly. How do you think about that? And kind of, are you planning on doing many more blockchains, or is it just going to be a couple of like the EVM, like Solana and the EVMs, or how do you think about that multi blockchain approach, and what are the complexities with managing that?
Well, we live in a multi-chain kind of world. I would say maybe, unfortunately, I'm not sure, it's not kind of my personal opinion is that we have too many chains. But at least we have competition.
I think there'll be some. I think there will be a consolidation in the future, but I agree with you. Right now, I think there are too many.
Yes. We started with Solana. We really love the Solana Foundation guys and the amount of work that they've contributed to launch xStocks. And we have a tremendous partnership with them. And we think also the Solana ecosystem was a very good ecosystem to start with. It's a very kind of retail, vibrant ecosystem. And we, and I think the type of products that we bring to the table, like equities, people that want to trade Tesla or they want to trade MicroStrategy, right? Like MasterX.
Yes.
It's a very retail kind of product. So I think that was the right decision. To go with Solana, and obviously now we're going with EVM. Maybe afterwards we'll do like maybe Move or something else, but I'm not sure. For now, Solana and EVM, I think.
Okay, awesome. Obviously, when you do something like this, compliance has to be really at the backbone of what you're doing, just to make sure that you build something that's sound, that has the integrity to scale, that really deserves the trust that's being placed in the project. Mm-hmm. So, how do you guys really balance that compliance, trust, and scalability? And maybe you can talk to us a little bit about the challenges that you had, because I know you started in 2001 and obviously you launching in 2021 and launching in 2025. What have been some of the real challenges in getting this product to the market from a compliance perspective?
So, much of the heavy lifting here is obviously regulatory, right? When we started, people told us there's no way you can do tokenized equities, and definitely you cannot do them in a permissionless way. And for us, that's that was the product, right? Permissionless tokenized equity. That was what we wanted to build, yes. And we really kind of had to do a lot of work. We went through many kind of jurisdictions and regulators and lawyers to try to find the right place and the right way to structure it. Luckily for us, we met early on very good Swiss lawyers that showed us the DLT Act in Switzerland that is very advanced. I think until this day, the kind of the most advanced crypto regulation in the world. And then using the DLT Act on the one side and on the other side, some, let's say, traditional structuring methods that are quite standard in Europe, like structured products, we were able to construct a product that on the one side, and you have a token that's permissionless. On the other side, it's always one-to-one backed by the underlying, and not just backed. It was more important not just to have it backed, but to actually have it collateralized. So the underlying is actually pledged to the token. So it's a very safe kind of structuring. It took a long time. We also worked very hard to get a European prospectus. So the products are actually retail grade in Europe. I think that took like a year. So it's the tokens are like MiFID II securities for TradFi people that are interested. So it's a lot of work to build all of that. But in the end, you have something that you can go to a regulator or to an exchange, an exchange that have a lot of compliance people and they're very afraid of the regulators, and tell them, no, this is a good product. You can take this to the regulators and they will approve it. And that's what we wanted to build.
Got it. So that took a number of years to get it all together, right?
Yes,
to be able to launch.
Yes, it took a few years.
And now, so let's just say that we want to do a new issuance, right? There's a lot of demand, not just in the secondary market, but in the primary market, and they want to get some new issuance. How long does that actual cycle take to?
So when you say new issuance, you mean a new product, like a new type, like let's say a new company, or just to issue, to mint new, like new tokens?
Just minting. Are there, because in crypto we're used to minting instantaneously, but are there like T+1 settlement, T+2 settlement things that you need to worry about and things of that nature?
Take about a minute.
Okay, but then obviously you guys go and you will buy. And maybe just to be clear, when I say you guys, who is actually doing the buying right now?
So Backed has an SPV company that is actually doing the actual. It has several brokers that it has accounts with, and we're buying the underlyings with the brokers.
Okay, so it's a seamless process. The minting and redemption is at crypto speed, effectively.
Well, it's we keep trying to improve, but we're in the end we're in the crypto industry, obviously.
Okay. Let's talk a little bit about some of the risks. Like, what is when you think about this model, when you think about some of the challenges and so even some of the things, one of the things about VALR we always want to do is be very, very clear about what risks that people are incurring when they buy particular products, right? Yeah. We really believe in full transparency and letting people make their own decisions. Yeah. So if you're talking to one of the holders of xStocks, someone that's just bought some xStocks on VALR, what would you say are these are the risks that are inherent in this product? What would your answer be?
Well, I assume you disregard the risks of whatever the underlying they're buying, right? If they bought, let's say, MicroStrategy, or they bought, let's disregard like the
great point. Great point. So let's say the risk, the volatility of the underlying asset, we've checked mark, that's done. Yeah. But what's the risk of the xStock structure?
The risk of the structuring, what in TradFi we call, let's say, the counterparty risk, right? So the counterparty risk, I think, in our structuring is very low, and that's why I was kind of it was very important for us that we're not just, buying the underlying, but actually pledging it to the token holders. So even if something happens to the company, to Backed, for example, there's a bankruptcy or something like that, there is a third party in TradFi, we call them the securities agent, that actually steps in and serves the token holders. So it's a very safe kind of structuring. Now, again, with every structuring, there is a counterparty risk, and obviously, things can go wrong theoretically. But this is kind of if you take like a securities lawyers or someone from TradFi, he will tell you this is kind of the top-notch kind of type of structuring that we've built.
Wonderful.
But again, there is still a count. When you hold an ETF of, let's say, iShares, right? You're not holding the underlying, right? You're holding a certificate by iShares or BlackRock, or that basically they hold the underlying. So it's a very, you can think about tokenized equities in many ways like an ETF of one share, right? It's an ETF of one stock. So there is a counterparty risk always. And, big players, think about pension funds, when they buy S&P, they split between iShares and Vanguard and different kind of issuers because of the counterparty risk, right? Yeah. So I think that in this case, there is also a counterparty risk, but I think we've created a very safe structuring so that this risk is very, very low.
That's great to hear. That's wonderful. Also, traditional stocks only trade, during market trading hours.
Correct.
Right. So,
unfortunately,
stocks are you can buy and sell on VALR, 24 hours a day, public holidays, etc. What have you seen? Any particular behaviors or things that you've seen with that disconnect between the underlying that trades only certain hours and the tokens that trade all hours?
Yeah, I think what we see is that there is a drop in volumes on the weekends because, people are less, when you know what is the right price, it's kind of easier to trade. We see less volumes, but we do see volumes. So people do trade. And I think we're waiting to, in markets, sometimes there is kind of climatic moment or a kind of a phase shift in the market. I think the first phase shift will happen when something will happen in TradFi on a Sunday. Think about a Tesla factory or something. Tesla factory getting burned on a Sunday. Okay, that's kind of the event, and not that I'm hoping something will happen to the Tesla factory, but something will happen at some point, right? That's how the world works. And then the market will be closed, but the tokenized equities, the xStocks kind of market, people that hold xStocks, that's still open, right? And people will trade, and then you will see a price discovery for the asset, for let's say Tesla, which is not occurring in the actual market or in the New York Stock Exchange, but rather in the tokenized market. And I think on that moment, people will start to appreciate the power, and that moment will happen at some point.
That would be wild if TradFi starts pricing off of crypto markets.
Yes.
That would be a wild eventuality. Wow. I think you're absolutely right. I think, sometimes I look at our ecosystem that we're working in, and I look at traditional finance, and you've got to ask yourself the question, why do we have these hours of where things are closed, where we're living in a world where pretty much everything is now automated, particularly when it comes to matching engines and things of that nature. Of course, there are risks associated with it, and, VALR running at 24 hours a day, 7 days a week, 365 days a year platform, it comes with its stresses, of course, but it's a great service for people to be able to transact at all times. In fact, I have a funny story, which is one of my colleagues, this is now back in 2016-17, when I was working at the bank. One of my colleagues, a fellow developer, she started trading crypto. That was the first thing that she was trading, his wife. And then she said she then decided to go and try out some some equities platform, and she wanted to go and buy. And it was at 10 p.m. at night, and she told her husband, "Hey, I'm going to go and just buy some stock." And he said, "No, you can't." And she says, "What do you mean I can't?" And it was such a foreign concept for her, who was used to just being able to trade crypto 24/7, to have market hours.
Yeah.
So I think even the traditional exchanges now have indicated that is changing. And I think we're going to be moving into a future where you're going to be able to trade at any time of day or night or day of the week. Yeah. Because these are restrictions that we've placed on ourselves that are really historical and don't have any place in society today.
Yeah, I agree. Coming back to what we said before, there are historic things that kind of, get settled, and it takes time for them. There needs to be some kind of a major shift in order for them to change. And, I have a similar story that I think my wife's uncle, he asked me when, I think it was 2015 or something, that I was into like Bitcoin, and he asked me, okay, how much did Bitcoin close yesterday? And I was like, what is closed? It's
true.
So
that's a good point.
Bitcoin is traded 24/7 around many exchanges. I think many people also disregard the fact of many exchanges, multiple exchanges. I think this is like, people see this as kind of as a bug, but it's a feature, right? No one is really controlling the trade, and no one can actually manipulate the trade, and no one. I think this is very, very important. And you said that we live in a world that everything is automated, but still, if you think about TradFi, much of it is very, very old. Clearing still doesn't work well. There is a lot of things that don't work well.
Absolutely. There are a lot of inefficiencies.
Indeed. So, when someone is buying, like with the Robinhood app, they're buying something, the amount of layers that are built in order to make that seamless thing are crazy. And we're just unaware of it. And I think with tokenization, basically you're getting all of that for free. You're getting so many things that TradFi has been trying to build for decades. You're getting the instant settlements. You're getting the fractions. You're getting the 24/7. All of these things that for each of them, TradFi has been throwing billions of dollars just to try to kind of integrate it into the current system, when you really don't need to. Like, it's enough to have this wrapper, and then you get all of that for free.
That's a great point. Let's actually list those benefits again. So you basically have fractionalization. You don't need to buy
you can buy share. 10 to the minus 8 or 10 to the minus 18 or whatever.
Absolutely. So you can buy any amount really of these shares.
Yeah.
There's instantaneous settlement because you in the
swaps.
crypto world you don't. Yeah. The trade, the execution is the settlement, right? Then you also have 24 hours, 7 days a week trading, just basically
worldwide.
all the time.
Worldwide. Yeah.
Are there any other ones that we've missed out that we should talk about here?
Multiple venues, obviously.
Multiple venues, absolutely.
Yeah, I think,
and also probably much easier ability. And I don't know if people are doing this yet, but just going into DeFi, for example, and borrowing against your crypto assets, you don't need to go through credit committees or anything like that. But if you've got something that the community thinks is of value, you can go and borrow against it, right? So these are very powerful.
Unlocking advanced, let's say, things that advanced finance which exist in TradFi, right? You can borrow against your assets in TradFi if you're rich, right? So, or if you have your own kind of family office, you can do a lot of this stuff, right? But
also it takes some time. It's not an easy process.
It's not an easy process. It's not, again, but that's why it works if you're rich, right? Because it's worthwhile to have someone kind of do that for you. But if you have just whatever $100,000 of Tesla, like it's not that easy kind of to use that money and borrow against it. And in crypto, it just works, right? And you don't even have to build it, right? It's all kind of incorporated or the whole DeFi ecosystem just works. And also, by the way, not just the DeFi ecosystem, right? There's also kind of CeFi, right? There are companies that will take your Bitcoin as collateral and lend you money. And there are exchanges, and there is a lot of because of this flattening of the ecosystem, it's much easier to innovate. And I think that's the most important thing. It's kind of how rapidly and easily you can innovate in crypto.
Yeah. I mean, VALR does that. There's a number of assets you can borrow against your assets. We obviously hold the assets, but we don't do margin calls and hope you pay back. It's just, there's an automated process of liquidation if the market moves against you, which is very powerful because also, you can't lose more than you have on the platform. Right? If things, you're not going to call you and ask you to pay into the platform. B, you can see it live. There's a lot of networks. And then C, you can make the decision yourself when you want to do it, when you want to pay back any time of day and night. So it's a very powerful ecosystem that's being built over here. In fact, I wanted to transition a little bit to some of the lessons that you've learned in crypto and how that kind of affects your vision of the future financial system of the world.
So I think both in crypto and in TradFi, my kind of most important lesson is that you should not really take shortcuts. Like sometimes you can take shortcuts to get to market, but you really have to keep them in mind and close them. And let's take a TradFi example, right? So if you buy an ETF today by iShares, usually it's physically backed, namely that they actually own the underlyings. But if you look, 20 years before, today, most of the ETFs, I think, were synthetics. So actually, they did not buy. They were buying forwards or different kind of perps.
They were hedging in some way.
They were hedging, yeah. And it was cheaper, right? But the issue was that if something catastrophic happens, then you're wiped clean, right? So, and we had this in 2008, right? We had the financial crisis, and people that held very solid kind of instrument, they held S&P. Okay, so okay, S&P crashed, but how much did it crash? 30%, 40%, 50%, doesn't matter, right? It goes back up. But if you held a synthetic S&P, it went to zero because the banks and all the infrastructure behind it went to zero. Okay, and they went bankrupt. So I think that is kind of an important lesson. And in crypto, we've seen this time and again, right? I can give 20 examples. So I think when you're building something that you want to scale as a financial asset, it needs to be sound. Okay, and that's what we were kind of aiming here. That was why we were so insistent that like it's one-to-one backed, and that's why we named the company Backed.
Yeah, absolutely.
So absolutely. I think that's kind of a lesson that one has to learn.
So for clarity, just to make no ambiguity whatsoever, you guys aren't using derivatives or anything like that to hedge. You just go buy the underlying.
We're not hedging we're not hedging with perpetuals or with with options or with forwards or with any other like different kind of instruments you can buy and trade. Fine, no, it's purely one-to-one backed with the actual kind of solid underlying.
Wonderful, good. So, Adam, as we come to the end of here, I just wanted to kind of open it up to see if there's any other thoughts that you would like to share with our listeners, particularly as it relates to kind of the things that excite you about the future of our financial system, the future of what you're doing, the vision that you may have. But maybe leave us a little bit with that vision that inspires you on a day-to-day basis so that we can kind of get a glimpse of what you see.
So I think the vision is, when you think about tokenized equities, there are different use cases, like with stablecoins, right? There are different use cases. There is the use case of just having, efficiency, right? It's more efficient. We spoke about it, right? And there is the institutional kind of vision. Also for stablecoins, but and also for tokenized equities. But there is one vision that is like important, and that's the vision of kind of accessibility. And many people around the world don't have good access to dollars, and even more people around the world don't have good access to equities. And I think, coming back to what we said before about we're living this experiment of 50-something years of fiat, right? In this fiat world, basically, your value in a way is being drained or being, kind of inflated away from you.
Eroded
is a good word indeed.
Yeah.
So I think this accessibility allows people around the globe to keep their hard work value that they created for themselves as a store of value and invest it. Even within the S&P it's such an amazing instrument, right? Warren Buffett kind of kept iterating that's how good is the S&P, right? And I think just having people around the globe, almost all of them, have a good access, reliable access to kind of take the value that they created and, just store it as the, store of value, right? And be able to invest it and grow it, and then, either grow out of poverty or grow out in general and basically have their, financial kind of growth through their life, I think is very important. So that's kind of the main vision, I think.
That's wonderful. I was having a basic discussion group yesterday, actually, and one of the things that we were talking about with the people in the group was this idea of the inequalities that exist in the world, and how over the last few decades they've actually been really becoming more and more stark. That there's been this huge wealth expansion in the very, very top. And at the bottom of the pyramid, so to speak, things have become very difficult. Now, of course, it's all rising, and there's a wonderful story.
I think it's all rising.
How humanity is doing, but the inequalities are becoming more and more stark. And so one of the things I'm excited about things like this is just, as you said, accessibility, allowing people to get access to products they may not have had access to before, always improving them, as we talked about earlier in the conversation, to see, how can we get more and more rights and things to the end customer ultimately that will happen, I believe. So lovely to hear that we have people all over the world kind of working to try to make the financial system better, more accessible, and to make the world a better place. So, Adam, it's lovely having had you. Thank you very much for your time. I look forward to, what did we say, 2 cycles? In 2 cycles, we'll give you a call. In 8 years, and we'll see if tokenized equities has overtaken stablecoins in issuance. But thank you so much for joining, Adam, and all the best.
Thank you. Thank you for having me. Thank you very much.
Bye-bye.